Okay, so we begin by putting the heading trading and profit and loss account for the year ended 31st March 2004. Okay, so as you all know, you begin your trading account with your sales. So the bone of contention has actually been the case that this sales is not visible here. What we see here is a cash sales of 48,000, but we also need total sales. Hence, if we have our cash sales here, we should be bothered about where the credit sales is. And that is why it becomes necessary for us to prepare our debtors account and know the credit sales, which we have done successfully. So let's go and pick the credit sales. And the credit sales, I think we had 80,000, but let's just compare. Oh, sorry, 60,000. Yeah. So we pick this 60,000 and we add the cash sales of 48,000 to it to give us the total sales. So our sales is a combination of 60,000 credit sales plus 48,000 cash sales. So you can do this aggregation on the face of your trading account. And that will give us 108,000 as our total sales. Okay, so please always watch out for this. Assess your credit sales by preparing your debtors account. Check for any cash sales. Watch out for some of the words. Sometimes you see takings, TAKINGS, that's also sales, or turnover. Okay, great. Now with less returning was, this question has no returning was, so we move on to the cost of sales, which begins with the opening stock of goods. And our opening stock of goods, ladies, I think is 41,000. We add the purchases, so we add purchases. For the purchases, again, you need to assess. You look for your cash purchases and your credit purchases, which is available in your creditors account. And we have the luxury of that because we have prepared our creditors account, and the credit purchases was 31,100. So we add the two figures, 31,100. There is a cash purchases in the bank account, so we add on that to give us our total purchases of 51,100. Great. Watch out for any return out was, carrying was. We don't have that in this question, so we add together to have our costs of goods available for sale. Please, if you have questions along the line, you prompt me and you ask. So that will be 92,000, 100. If you did you want to ask a question or with less closing stock? Closing stock in trade, I think is 39,000. You less that to get your cost of goods sold. And then you assess for any trading expense, wages, or any direct trading expense, which we don't see in this question. There is no wages here. What we have is salaries. That will be in the profit and loss account. So there is no wages and there is no direct trading expense specifically given in this question. So our cost of goods sold will be the cost of sales. So 92,100 minus 39,000, that should give us 53,100. So we less that from our net sales and that'll give us our gross profit. So gross profit of 54,900. Great, very simple. So that will end the trading account. You move on to the profit and loss account. You add other income, you less expenses. Do we have other income? Discount received, commission received? I don't see anything like that here. So we move on to less expenses. Let me see if I can shift it up a bit. So for the expenses, when you check your cash book, let me see if I can take these things down a bit so they'll all be on the same page. Okay. Okay. So let's check the expenses given in the question. And I think our first point of call will be the credit side of the cash book or the bank account. You see salaries, you see rates. Yeah, you see only these two. Now, when you move down to the additional information, you see expense creditors, and then you also see rates, right? So you have the luxury of preparing one expense account for all the expenses in here, or simply you can combine the expense for creditors and rates together, right? Since the salaries had no issue for you to prepare salaries account, right? It really becomes necessary for you to prepare the expense account if you have opening balances and closing balances, okay? And you also have some amount paid during the year, right? So in this case, salaries had no issue, but rates had, and then you see the expense creditors too. At some point, we made some cash to them. So let's prepare those account, but we can quickly put in the salaries, which has no issues, of 12,000 in that for a simple tick. The next will be the rate. So it is important that we go and prepare the rates account. The rate account. I think having gone through the expense account with you, this should not be a problem. So rates, what do you need? You need the opening balance, how much was paid during the year, and closing balance. So the opening balance here is an owing. So rate owing, that will be a liability. So that liability will be put at the credit side as balance brought down. So the figure is 1,200. Okay. Then we look at how much we paid during the year. So during the year, we paid rates of 5,000, as you see in the bank account. So that will be here, bank. $5,000. Then we finish it up with the closing balance of 1,400. So obviously, if the brought down is at the credit side, the carry down, the closing balance will be at the debit of 1,400. We balance it and see the difference, which will be taken to our profit and loss account. This will give us a total of 6,400. 6,400. So the difference is 5,200. And that represents how much should be taken to the profit and loss account. Okay, let's finish up the account with the necessary underlining and bringing down the carry down. So balance brought down 1,400. Okay, so you now go back to your profit and loss account and put in the rate expense. So rate $5,200. So you now see the need why it's necessary for you to prepare your expense account so that you can get how much expense you are supposed to take to your profit and loss account. Where has my question gone to? Okay. So the next thing is for us to prepare the expense account, as in the expense creditors, and look at how much expense we have to put in our profit and loss account. Let me get the question back. Okay, so let me go and open the expense account. Okay. Or expense creditors, as is stated in the question. So let's pick the figures. So again, we will need the opening balance, the how much we paid to them during the year, and the closing balance.
In progress.
Okay. Okay, so the question is loading for us to continue. So your expense creditors, you had an opening balance of 9,000. So these are creditors, okay, or expenses in arrears. So balance brought down will be at the credit side. The figure is 9,000. And then during the year, we pay them some amount of money, which is cash paid to expense creditors, 3,500. So that will be here. Okay, cash paid to them, 3,500. And then we put in the closing balance of 10,200. We balance it and know how much will be taken to profit and loss account. So the total will be 13,000 700. The difference between 13,000 and 9,000, that should be 4,700. So this represents how much we take to our profit and loss account. Okay. Let me make my account look presentable. Okay. Okay, I see something in the chat. Let me see what it is about. Okay, my line is breaking. Wow. Mommy, can you alert me where it started breaking, if it's okay now? Is it okay now?
Yes, it's okay now.
Okay, at what point? So that at least I go back and reiterate the point.
So please, at first there was 91,000, but you corrected it and like it was
Yes.
breaking at that point. So it's okay, you don't have to go back.
Oh, okay. Okay. So yes, that was a typo error. The figure is 9,000. The opening balance on the creditors, expense creditors, was 9,000. So the correction was made there. Okay, thank you. So we finish the account. Let me underline the figures, the total especially, and bring down my okay. So we go into our profit and loss and put in the 4,700. Okay, as the expense. You can add the creditors to it, okay, just so to make your labeling look specific. Okay, so our expense creditors 4,700 is how much expense we incurred for that particular year. Watch out for provision for depreciation. It might be in the question. Some questions will give you, like you did in the sole proprietorship. It could be here, maybe 20% on cost or reducing balance, whichever. We are fortunate in this question, we don't have. Sometimes too, when you are given some assets like a building, fixture, or furniture, you should compare the balances. So imagine if your building on first April was say 80,000, and then as at 31st March, it becomes 70,000. You would realize that it has decreased. What has decreased it? That is possible depreciation. Okay, so watch out for some of these things. But in this question, the things are not there. No depreciation for us to consider. So we get our total expenses. We put it under our gross profit and find our net profit or net loss. So when we add these three figures, we'll get 21,900 deducted from the gross profit. I think we should arrive at a net profit of 33,000. So this was what I was expecting from my professors. Any question? Yeah, Professor.
Mr. Man, you see the expenses, the rate, and the creditors. Because there are calculations, is it compulsory to add it to your solution, or you can do it somewhere else as a welfare something?
Are you asking that is it important to show your workings like I did down here as part of your work for presentation, or you can work it somewhere
Yes,
else?
please.
Yes, it's important that you see in exams you are required to show all workings. So if you do, please, it should be part of your answers, right? Because some marks are allocated to the workings as well.
Okay,
Because
thank
yeah,
you.
yeah, thank you too. Any other question? Okay, so dear professors, this is really the basis of single entry and how you can make the records adequate to prepare your trading account and profit and loss account. Okay, I think we'll solve a question that has the balance sheet in there as well, so you appreciate. And then I think we would end with calculating the profit, okay, using a simple formula. Okay. So any questions, professors? If there are, let me hear them and address them. No questions for me? Okay. So dear professors, you see that we just ended with preparing our trading profit and loss account, which has helped us estimate our net profit. Now, sometimes some businesses do not even have records that could assist you prepare even the trading account. Okay, because like the question we just solved, we had information about debtors, so we could prepare the debtors account and get our credit sales. What if we didn't have any information on debtors? Then how would we have gotten our credit sales? And without the credit sales, you can't prepare your trading account to move on to your profit and loss account to get your net profit. So sometimes it becomes very complicated to get your net profit or loss if you want to rely on your sales, purchases, expenses, and income to prepare your trading profit and loss account. If that happens to be the case, then you can also use this. And this is the statement of profit. You can use this statement to determine your net profit for the year. It's a very brief statement. Interestingly, you can refer to your balance sheet financed by. Okay, financed by. However, before I take you to that, let's look at this statement of profit. So it says that the net profit or loss may be determined when opening capital, additional capital, if any, drawings, and closing capital is known by preparing a statement of profit. So pay attention to the key things here. Opening capital, additional capital, if any, drawings, and closing capital. So if you have these four items, you could use that to get your net profit. And that will save you the stress of having to look for your sales, your purchases to prepare your trading account, and your expenses to prepare your profit and loss account to get your net profit. Now, before we come to the formats, let me do this with all of us so we'll appreciate. If you are preparing a balance sheet and you get to the financed by, dear professors, this is what you do. So when you get to your financed by section, what you do is you bring your capital first. And actually that capital you bring first is your opening capital, just that we don't label it like that in our balance sheet. We just write capital. Okay. Then what do? You add your net profit and you less your drawings. If there is any additional capital, it only makes sense for you to add to your opening capital. So add any additional capital. Because if you are doing a business and you bring in more capital, it's added onto your original or opening capital, right? Great. Now, when you adjust these things, you come or you arrive at the closing capital. The closing capital, which most of the time is added to the long-term liability to get the capital employed. So, dear professors, it is out of this arrangement here, we now try to make net profit the subject. So let's do this. Per what I have here, OC is for opening capital, right? We add additional capital, which is AC. Then we add net profit, which is NP. Then we less or minus drawings D. And that will be equal to our closing capital CC. So out of this mathematical statement, we can make net profit the subject, NP the subject, and my abled mathematicians. If you have this expression and you want to make NP the subject, what expression are you going to get on your right-hand side? Quickly, if somebody can do that for me. Okay, so if we are making NP the subject, then it makes sense to say that your CC here would have D being added to it, so plus D, then minus OC, and then minus AC. Okay, so out of this expression, we could have net profit being made the subject, and that will be CC, which is your closing capital, plus drawings, minus opening capital, minus additional capital. If you appreciate this formula, you extend it or bring it or represent it on your statement of profit, and this is what you have. Your closing capital, CC, you add drawings as we added the D. As we added the D. Okay. And then whatever you get, you less the opening capital and additional capital. And your result will be the net profit for the year. So that's your statement of profit. A very simple statement. Bring your closing capital, add drawings, less opening capital and additional capital. So most of the times you can be given information about your opening capital, closing capital, drawings, and you'll be asked to find the net profit. However, that will be so cheap. So what examiners do is they'll give you assets and liabilities. Okay. Give you your drawings, yes, additional capital if any, and ask you to find the net profit. So what you have to do is to use your statement of affairs to determine either the closing capital or the opening capital. And as you know, for your opening capital, that will be your statement of affairs at the beginning of the period or opening date. And your closing capital will be at the closing date. Okay, so we'll pick one question in the next session, which is the last session, and we'll see how this statement of profit is actually prepared. But dear professors, grasp this format into your head. Very simple. Closing capital, add drawings, you less additional capital and opening capital. I'll see you in the last session. Thank you. And please, let's be fast about joining so we don't waste the time.